guys. So, welcome. It's another episode of Friday Finance. Welcome, everybody. I think my lips are looking a little chapped today. All right, guys. So, what do I have in store for you today? Now, last week I did promise I was going to continue discussing investing in the stock market. So, as promised, today will be the second part of investing in the market, guys. So, before I dive into this, I need to mention a few items to you, though, okay? So, number one, I was watching the news, and once again, Congress could not agree on a stimulus plan, so there's no stimulus, guys. There's no additional $600 unemployment money, and there's definitely no $1,200 check. By the way, they just took a break. Okay, they're on vacation. They went on vacation, and they're not coming back until after Labor Day. So, if anything, we're not going to see a stimulus check or a stimulus plan until after Labor Day. That's in September, by the way, okay? So, that was the first thing. The second thing is this, guys. Uh, they mentioned that on the news that the average credit score has increased significantly. It's the average is currently at a 784, and this is all great and everything, but that doesn't mean that credit will be extended with to you. Just because the average credit score goes up, it means this that the banks now are going to expect individuals to have higher credit score because before they can loan them any money, guys. So when they said that, they also said this: the mortgage rate, I know it's very low. It seems like, they can't increase it. But guys, it's been increasing steadily, the mortgage interest, okay? So be careful with these things. Just because the credit score is increasing doesn't mean that it's a beneficial thing. So, number three, guys, the number of Americans investing in the market has grown to, get this, 55%. This means that 55 out of 100 Americans own stocks or invested in the market. That is awesome. I'm just so happy about that. More people, as a result of the pandemic, and of course, because of Robinhood, more people are getting into the market and investing in the market, which is great news. So, if you're on here right now and you're not invested in the market and you're looking to invest in the market and you need some information, remember, I am here for you. Whatever knowledge I have, whatever information I have, I'll be more than happy to share it with you. DM me and I will go ahead and have a conversation with you, all right? Now, number four, this week, talking about stocks, Tesla announced a 5-for-1 stock split on the heels of the Apple 4-for-1 stock split last week. So, guys, what does this mean? This means that if a person owned one share of Tesla, that one share will now become 5 shares of Tesla. Tesla is currently at about 1,600 today. So when the stock splits, which will take effect next at the end of this month, next month you should be able to buy the new share price. Okay, so when it splits, it's going to split 5 ways. So your one share will become 5. So now the stock will no longer be 1,600. It's going to go down to about $300 a share. Just like with Apple. Apple did a 4-for-1. So one share of Apple is now 4 shares, guys. So this means that starting in September 1st, each Apple share will be about $100. So number 5, guys, the big question is, wait a minute. Shouldn't the large companies also follow suit and maybe initiate a stock split? Like, the Amazon. This week, the famous investor Jim Cramer suggested some companies should do just what Apple and Tesla's doing. They need to split some of their companies so the shares can be more affordable to the average investor. Hi, Kathy. Okay. By the way, guys, if you're on here, say hello so I know who's here, okay? Say hi. Drop a message in the chat box, all right? So, guys, listen. So, Jim Cramer he is one of these famous investors. He's been investing for quite some time, guys. He has his own show on CNBC. So his question was, should the other companies also follow through and do a stock split? So he suggested companies like Amazon, Facebook, Chipotle, which is about $1,100 a share, like I mentioned last week. Google, which is about 1,500. Colbert, how are you? Welcome. That's awesome. Colbert, happy Friday to you too, lady. Colbert is one of my former students, guys. Shazam. Oh, anytime, Colbert, anytime. Just DM me after we're done with this live and we can have a conversation about it, okay? I'm more than happy to help out. Remember, guys, ask your questions. I love questions about money, about investing in the market. I don't just talk about stocks. You just caught me doing the stock conversation. All right, Colbert. So back to what I was saying, guys. So Jim Cramer is like, listen, Amazon, Chipotle, Google, Home Depot, Shopify, Facebook, Costco, all these companies need to also consider doing a stock split so that those of us who've been buying fractional shares, okay, we can start buying whole shares because the stocks are too expensive. Amazon is $3,000, Chipotle is $1,100, Google is $1,500, Tesla is $1,600. Guys, those are expensive. The average individual cannot afford to buy a whole share. So now they're just having to buy fractional shares. So in other words, if you have $50 and that's all you can afford and you want to buy Chipotle, you go in there, type in your $50 into Robinhood, Cash App, Fidelity will do it, Schwab will do it. You put in your $50 and you buy $50 worth. But once Apple goes through its split, okay, and then Tesla goes through its split, you will no longer just be able to buy the $50 worth. You can still do that, but you will be able to afford a whole share. Because you see, Apple's going down to $100, Tesla's going down to $300. So guys, that's way more affordable. And those of us who already own the stocks will have more shares of these companies. So for each one of my Apple stocks, I'm now going to have 4 shares. So if I had 10 shares of Apple, now I will have 40 shares. If I had 5 shares of Tesla, now I'm going to have 25 shares of Tesla. That's the beautiful thing about investing in the market. However, you have to invest for the long haul. You don't know when these things are going to happen. That is why, guys, as an investor, you hold on to your stocks for a long time, okay? So now let's get into the nitty-gritty of investing in the market, okay, guys? So one of the questions last week, if you didn't watch the video last week, you might want to go back and watch that video. I gave you some step-by-step instruction on how to get started in investing in the market. So this week, I want to focus on simply, when should I sell my stocks? When is it a good time to sell my stocks, okay? So first and foremost, guys, before selling stocks, please consider the tax consequences. Yes, the government always wants its fair share. It always wants a part of your money. So it is going to go after you for taxes. So here's the bottom line, guys. If you sell a stock at a profit, okay, you may have to pay taxes. If you own, listen to this one, guys, listen clearly. If you own a stock for more than a year and you sell it and you make a profit, the profit will be taxed at the capital gains rate, which is 15%. If you own the stock for more than a year. Now, if you sell the stock and you didn't own it for a year or more, you owned it for less than a year, it's going to be taxed at ordinary income. So if your tax bracket is in the 25% tax bracket, you're going to be taxed at the 25% rate. Okay? So if your tax bracket is at the 27% tax bracket, you're going to be charged at the 27% tax bracket. So be careful. Consider when you first purchase your stocks before you go and sell your stocks, okay? So here are the top 3 reasons why people sell their stocks. Number 1 reason, you've got a bad stock. That stock is not performing for you, okay? You made the decision to buy a stock, and for some reason, one reason or another, it's just not performing for you. So Rather than hang on to it, just go ahead and sell it and get some of your money back, guys. And yes, when we invest in the market, there's a possibility we could lose some or all our money, people. This is not a get rich quick scheme, okay? It's risky. So, listen, if the stock is not performing, sell it, take your money out, invest it elsewhere. Don't fall in love with these stocks, guys. The stocks don't love you. Don't fall in love with them, okay? Now, they certainly don't love you, so be careful with that. They have no feelings. This is all about keeping your cash. It's all about preserving your cash, guys. So whatever cash you put in there, you want to keep that cash, okay? That's what this is about. This year, I'm going to tell you guys one of the bad investments. Well, it wasn't a bad investment at first, okay? So I bought this company called Luckin Coffee out of China. And I bought it because I love coffee. But have I ever seen a Luckin Coffee? No. But I've seen Starbucks, okay? So I'm like, oh my God, Luckin Coffee, the competitor of Starbucks, let me buy some shares of it. And I did. I bought it at $19 last year. But this year, I'm sure you guys heard it on the news, the SEC went after them because they were cooking up the books. So I watched the stock, guys, drop from like $38, $40 a share all the way down to about $3, $4 a share. Yeah, I lost money. I ended up selling the stock at a loss, but that's okay. I learned my lesson, so I am very cautious when I go into the market, okay? Yeah, I lost a little bit of money. I did. But guys, it's just a lesson learned, so you just go ahead and move on. Now, the good thing is, one of the things I like to do with my stock is, once they start running like that and they're making great profit, I like to take some of my profit. So thank God I did take some profit and I sold some of the shares, so I did recoup some of my investment. But in the process, I still ended up losing money. All right, here's the second reason why people sell out of their stocks. Number two, if you have a stock that's performed significantly well, guys, it's done really, really well. I'll give you some examples in a minute. I forgot to mention my disclaimer, okay? Let me just say this. I'm not a financial advisor, okay? I am just here giving my opinion, sharing my opinion because I want people to do better with their finances, okay? So these are just my opinions, guys. I'm not telling anybody to go buy these stocks, okay? I'm just talking. So going back to number two, why people sell their stocks: to take profit. Now, if you have a stock that has done really well and is a majority of your portfolio, okay, and so you may want to start selling some of your shares so you can get some of your original investment back, okay, get some of your capital back, all right, and then leave your profit to ride the market. I like doing that, guys. For example, one of my larger investments is Tesla. And so when Tesla started running and it was making money and it became a significant amount of my portfolio, my account, I decided, okay, you know what? It's time for me to sell and take some profits, okay? So I sold some of it and took some profit. Yes, I did. All right? And so now the majority of the money I have left, that's profit that I've made in that stock. So I've practically removed all of my capital, all of my investment that I put in that stock. So guys, what does that do for me? It makes me feel very comfortable. I know I'm not going to lose my own personal money because I'm using the profits to make me money to grow my coins. That's how you do it, guys. Now, when you sell a stock like Tesla, okay, last year when I bought, yes, no, I told you guys I was going to be very transparent, okay? I was going to be very transparent. Okay, some of the shares of Tesla I bought them at around $220. Okay, so if I bought a share of Tesla at $220, guys, and I sell it at $1,400, okay, that's a nice profit right there. So in order to avoid paying a significant amount of taxes, what I started doing was to sell some of my losers, like Luckin Coffee. I sold some of it because I wanted to go ahead and balance out my profit with my losses. So hopefully I have a wash. But last week somebody asked me this question. Well, what about the taxes? I don't want to pay the taxes. I don't want to pay the taxes. So the example I always give people is this. If you say you don't want to pay the taxes, how about this? Let's look at it this way. So let's say my Tesla stock, I made $700 off one share. And then the government says, I want $100 of that in taxes. So I give them $100 in taxes. I made $700 in profit. So if I made $700 profit, I give $100 in taxes. I still have $600. Guys, come on now, okay? Let's get real. You make $600 and you give $100 in taxes. What are you complaining about? $600 you didn't have. If you left that money in your savings account, you wouldn't have made that $600. So listen, just pay your little taxes and move on, okay? You're not going to take all your profit and give it away to taxes. No, 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 okay? It's just a minute amount of your profit, okay? So just put it into perspective so you can deal with it. Plain and simple as that, guys, okay? And then the third reason why people sell their stocks is to raise money, okay? Now, guys, remember, you have a reason why you are investing. Why are you investing? To grow your coins, to grow your money, okay? So, what do you need the money for? You need the money for a lot of reasons. It could be for retirement purposes. It could be for traveling. It could be the down payment on a vehicle. It could be the down payment on a house. So, if you need money for any of those activities I just mentioned, okay, and you've got the stock portfolio sitting here, you're trying to purchase a house, you need a down payment, so you sell some of your stocks. You're trying to purchase a car, the money's sitting there, it's an investment account. For you to have access to money, you sell some of your stocks. Plain and simple as that, okay? So be careful because some of the money will take time to settle. What does that mean? It means that when you sell a stock, guys, in order for you to have access to that money, unless of course you're investing it, if you're investing it, like you're selling one stock and you're buying another one, it happens like that. It happens very quickly. But if you're selling it to take out money, it takes 3 days for that money to settle into the account. Because remember, this is a transaction. You're selling that stock to somebody else, and that person is sending you that money, so it's going to take time to settle. And it usually takes about 3 business days to settle before you can have access to that money. You can take that money and transfer it into your checking account so you can do what you need to, okay? So be careful with that, guys. So this means that another reason why people might want to sell their shares is because they want to invest in other stocks. For example, when I sold my 1 share of Tesla, the reason why I sold it is because I wanted to invest in other companies. So I'm like, okay, you know what? I've got all this profit here. Let me sell at least 1 share so I can go ahead and reinvest it in other companies, other investment opportunities, guys. So I hope this will help you in making the decision as to when to sell. But for those of you just starting out, just remember, guys, hold on to your stocks for a while. Don't sell them in less than a year, okay? Hold on to them. And you only invest money that you're not going to need, okay? You're not going to need for the next 3 to 5 years. If you're going to need that money tomorrow, do not put it in the market. Please don't do that, okay? Don't put your low savings in the market. This is money you're investing after your low savings account. All right. So here are some things to remember in part 2 of this episode on investing in the stock market, guys. Listen, people. Number 1, you cannot own every stock. You can't. Sometimes I want to own them all. You can't. Listen, you've got the S&P 500. That's 500 of the biggest stocks on the NYSE, guys. You can't own them all. If you want to own them all, you buy the index, by the way, the S&P 500 index. It's called SPY, S-P-Y. You can buy the index fund. On Vanguard, it's called VOO, V-O-O-O. That way you diversify into all these different stocks, all 500 of them, okay? But personally, I like investing in the individual stocks, okay? My gains are better with the individual stocks. I do have some index funds, but I have very little in the index funds. I prefer to do individual stocks, okay? Now, number 2, remember, you can't invest in all of them, guys. Number 2, buy companies you know and love. Don't go buying companies you know nothing about. Don't go buying companies you've never heard anything about, guys. Buy companies you love, companies you know that will always be around. I'll give you an example. Target. Target is right around the corner, okay? So, you know the company, you drive by the company all the time, you shop at the company. That's a great company to buy. By the way, I'm not telling anybody to go buy Target, okay? I'm just talking. Buy what you know. Buy what you love. If you don't know anything about it, you have no business buying it, okay? So, Dexcom. That's a company that was on CNBC this afternoon. Do you guys know anything about it? You don't know anything about it? Okay, you can go do some your research. And if you're really good with the research, then you could determine or decide whether or not you want to purchase it. But guys, if you don't know anything about the stock, don't buy it. Why are you buying it? Seriously? Okay? Buy companies you love. Buy companies you know will be around. The Motley Fool is one of the podcasts I like listening to. They have what is called the snap test. Okay, if I were to snap my finger and tomorrow some of these companies were to disappear, which company would I miss? And you guys know what number one is. Number one is Apple. Those are the companies you buy. I'm not telling you guys to buy them, okay? I'm just talking. Okay, if I were to snap my finger tomorrow, Instagram was no longer here. Would you guys miss Instagram? If you're going to miss Instagram, that's the company you buy. By the way, Instagram is not a company. You know who owns Instagram? Facebook owns Instagram, people. Okay, I'll give you a third one. By the way, I'm not telling you to go invest in these companies. I'm just talking. If you were to snap your finger tomorrow, okay, and you've got Cash App. Cash App disappeared. Cash App is gone tomorrow. Would you miss it? You're going to miss it, right? Because you need to transfer money to people. If that's the case, that's the company you buy. But guys, there's no company called Cash App. Cash App is under a company called Square, okay? By the way, you can also invest in Cash App, and Cash App is not paying me for this, okay? All right, I'm just talking. So guys, listen. That's how we do it. You buy companies you know. You buy companies you love. You buy companies you know will be around for a very long time. Okay? Like the McDonald's people. All right? So guys, number 3. You need to invest for at least 3 to 5 years. Quit taking your money out of the market. I know I did it while I was home during the pandemic because I had nothing better to do. I was pulling money out left and right. And I'll give you an example. Oh my God, I can't believe I'm telling you guys this one. Okay, RH is called Restoration Hardware. Restoration Hardware, what is that company? They sell top-end, high-end furniture, okay? So I think I put some money in it in Cash App. And then it made some profit for me. So I'm like, oh, I'm going to take my profits within a week. Guys, let me tell you, that company is running. Warren Buffett bought that company. That company is now over $300. Guess where it started? Back in March, it went down to $86. Shazam! Okay? And I sold out of it. I mean, I took my profit, okay? I'm not sad that I took some profit. There's nothing wrong with that. But guys, $300 is so much better than $150 or $200, okay? So guys, listen. I'm giving you this knowledge because I want everybody to do better with their finances. Hi, Jada. Hi, Betty. I see you guys. Yes, guys, say hello, say hi so I know who's there, okay? So anyways, I'm giving you this information because I love it when more people are investing in the market. By the way, I watch the news all the time, and they're saying there's more people invested in the market. 55 out of 100 Americans are now invested in the market. More people are going to Robinhood and starting these investment accounts, guys. By the way, Robinhood is not paying me either, okay? I just want to give out information to you guys. By the way, action is what matters. I'm giving you the information. What you gonna do with the information, people? Hi, Ricardo. What you gonna do with the information? Okay. Now, I just told you some things. So let me see. Where was I? Number 1 was you cannot buy every stock. Number 2, buy companies you know and love. Number 3, you need to invest for at least 3 to 5 years. Okay, guys. Here comes number 4. Number 4. Be patient with the market. This is not a get rich quick thing, okay? You need to be patient with the market. Okay, here's an example, guys. All right. Hey, Leo, how are you? Welcome, welcome. Here's what I mean. Tesla, okay? Be patient with it. I know a friend, last year is when I bought Tesla. I know a friend who also bought Tesla. Now, when he bought Tesla, hey Nadu, oh my goodness, how are you, Andrina? Welcome, welcome, welcome. Okay, so guys, he bought Tesla. At the same time I bought Tesla, I kid you not, a month later, Tesla went down, okay? Tesla went down. You know what he did? He sold all of his Tesla shares at a loss. And I'm like, you know what? Listen, I believe in this company. I love the car. I love it. I love it. And I'm going to tell you guys something else in a minute, okay? I love the car. I'm going to hold on to my stock. Well, guess what? I held on to those stocks, and look at where we are today. Patience, people. Patience pays. Hold on to your stocks, okay? Be patient with them. If it's a great company, let the company run for 5, 10, 20, 15 years. Let it run. Let it do its work. The market fluctuates, but the companies move up way more than they go down, okay? They go up way more than they go down, people. So, what I want you to know, guys, is that back in March, there was another great transfer of wealth, okay? Because many of us were not invested in the market. We missed out on it, okay? So, guys, be ready. Take action. Even if you start with $5, $10, get started. If you need help, DM me. And be patient. Leave your money alone. Stop watching your stocks, okay? Just let them work. Let the market work. Be surprised. You log on one day and you're like, oh my God, Shazam! Look at how much money I have in there. But guys, all of that takes a lot of patience, okay? By the way, I'm not telling you guys to go and buy these companies. I am just giving you knowledge, okay? All right, guys. And then the last thing I want to say today is to keep adding more shares to these great companies. If you find a great company, keep adding more shares to it. I'll give you an example here. And remember, guys, I'm very transparent. I am sharing information with you. So I have to be transparent about me. I'm not going to sugarcoat anything. By the way, it's very hard for me to do this. One of these days, when I go big time, you hear that when I go big time? I hope I can share my public account with you. I do have a public account, which I started to demo to students. It's on Robinhood. I started my Robinhood account because of students. And so when it's time for me to show the information to the students, I show them everything. I don't hide it, guys. I give out the information. There's no reason for me to hide it. One of the reasons why we are not well educated, we're not financially literate, is because people are so secretive about money. They don't want to talk about money. They don't want to share the knowledge. I'm sharing it with you guys, whatever little knowledge I have, okay? Sure, Kathy, sure. Okay, we got a record. I'll hold you to that. You can hold me to that, okay? So, guys, listen. I'm sharing this information with you. But you got to listen, number one. You got to take action. Take action. There's no better feeling in the world to know when you walk into a store like Target and you know you own the store. You own shares of the store. You go into Walmart and you're like, wait a minute, I own this company. Wait. You go into McDonald's, you're like, oh my God, I own this. I own this company. Guys, there's no better. Listen, when I see a Tesla drive by and I'm looking at how slick it is, how gorgeous it is, I'm like, oh my God, I own this company. Shazam! Guys, that's how we need to do this thing. That's how we need to do it, Betty, okay? That's how we need to do it. Listen, people, the money is out there. We need to go out there, get our coins, okay? I want everybody to have access to financial literacy. I don't know how long it's going to take me to get there, but I'm on a mission. I want financial literacy to be accessible to everybody. Everybody, kids, adults, young people, I don't care who you are, what color you are, everybody needs to have access to this, okay? I don't want to keep this knowledge to myself. What am I going to do with it once I'm dead 6 feet deep? What am I going to do with it? Nothing. Okay, I just realized I went over my time, Shazam. So I am going to pause here, people. So we can go ahead and take some action and go get those coins, Kathy. Okay? So, people, I just said a whole lot to you. This was the second part of investing in the market. I don't know if you guys want me to do a third part. Thank you. Yes, amen, lady, amen. Okay, I don't know if you guys want me to do a third part. If I were to do a third part, the third part would be on ETFs and REITs. Okay, you know how some of you want to invest in real estate, but you cannot afford to buy a property? Well, guess what you do? You buy REITs. Shazam! 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 Okay? By the way, guys, if you're watching this right now and you're getting a whole lot out of it, why don't you share this with your friends? That's what I'm doing right now. Pass it on. Pass it on. Share it with your friends. And if you want a third part, you want a part 3, you want me to talk about those ETFs and index funds next Friday, go ahead. Type it into the chat box, guys. So I can go ahead next Friday and talk about the REITs and the ETFs. Guys, I love a good REITs. That's another way for you to invest your money in the market. But do you guys know what they are? Shazam. Okay. That's the secret. A lot of people don't know what they are. Okay. I've seriously gone over my time because I'm having too much fun here, too much excitement. I love talking about money. So guys, listen, my goal here is to help with your finances, help you with your finances so that you can do more, live more, and enjoy more, because we need money, people. We need our coins to travel. We need our coins to go and enjoy this life, Shazam, to live this life. We need our coins. And you guys know I love living my life, okay? So that's it for today. Until next Friday, I guess we're going to have a part 3. Okay, Ricardo, I see you. Yes, Betty, bring it on. Okay, part 3, definitely. But guys, share this knowledge. We learn something great, we pass it on, share it with other people. Please do that, okay? I don't know who this information is going to reach, who needs it, but pass it on, pass it on, pass it on. That's how we're going to teach each other, guys. That's how we're going to put ourselves in a better position. That's how we're going to create the family legacies. Guys, come on now. Come on. Okay? That's all I'm saying. That's all I'm saying, okay? Now, somebody told me, I want to learn more about stocks. Maybe you should do like an investment group. So I'm still thinking about that. Okay, pray for me. Maybe one of these days I'll start an investment club. Okay, for those people who want to join. I'm going to leave it there, guys. Too much excitement for one night. I'm well past my time. Thank you for attending. Thank you for the encouragement. Thank you so much for the support, guys. I love it when you join me here every Friday from 7 to 7:30. I am here for you talking about money. And if you need to reach me during the week, DM me. I'm on Instagram. I am also on Facebook. Yes, Generational Wealth. I love it. Okay, I'm on Instagram. I'm on Facebook. I'm on YouTube. By the way, guys, you can check me out on my podcast. It's got, I think, 9 episodes. I'm not regular with it, but guys, I put some of this information on my podcast, Shazam Lifestyle, okay? So if you want to check out the podcast, you can Google it and it'll pop up, okay? So I'm still adding to it. And thank you, lady. Thank you so much. Yes, definitely. I'm going to keep doing this with you guys. As long as I have breath in me, I'm going to keep passing on this information, guys. Getting people this financial literacy knowledge, okay? So that's it for today, guys. I'm out. Let me drop some music for you. And then I will see you next Friday. Thank you so much.